Hey, what's up everybody? I want to break down this Apple trade for you guys and show you all how we were able to make our money with this setup that's being presented today, and then how we took our entry intraday. So here's a little bit of verification that the trade ran. A lot of profits here posted from the team members, so I'll let you just kind of take a look at that. A lot of them love to post in percentages. There's something to be said about posting in percentages. You always want to be thinking in percents, because if you are trading with a lesser amount of capital, that doesn't make your gain any less significant. So when you're posting or thinking in percents, from a monetary standpoint, your gain can feel insignificant, but by posting in percents, you feel still relevant, and it doesn't matter what anybody else is doing or posting, right? You are on your own journey. So being able to post up these profits in from a percentage standpoint, it allows you to stay focused on what you're doing versus what other people are doing. All right, so this was the setup. We're going to go to the weekly chart time frame for Apple. This is called an ascending triangle. It has a series of higher lows. So here's your low, higher low, higher low, higher low, higher low, all being compressed into one single point of resistance. That's going to be right around the 140 price point. So the way that this pattern works is that once you get a break of the resistance, you get a lot of volume coming in and a bullish continuation move to the top side. Yes, I know it has broken over one time previously, and we are aware of that. But that doesn't mean that this pattern is invalidated, because we know in trading that not everything is going to be 100% perfect, and so this can just be thought of as like outlier data. The majority of the price action is getting rejected underneath the 140 price point. So we're going to move to the daily chart time frame. By the way, this is called cross time frame analysis. We're moving to the daily chart time frame. We can get a better idea of what's going on here. Clearly the resistance is at 140, and above 140 we don't see much resistance in the past until the 145 price point, which is also the all-time highs. So that meant that over 140, if we took a trade today over that price point, we had a large profit margin, a $5 profit margin to the top side. And the only criteria that needed to be met is that it needed to hold over 140. So we're going to move to the 5-minute chart time frame and see what we have pre-market. Pre-market, the stock opened up above. Let's just replace our level here. The stock opened up above 140, right? So we see pre-market had pushed up and was trying to hold it as support all throughout this pre-market session. So what we decided to do then is instead of taking the stock long at 140, because it's already broken 140, right? We put this out on the day trade watch list here. I'll show this to you. We put this out on the day trade watch list that we're going to take it long over 140.5. Why? Because that was at this time the pre-market high. So 140.5 was the pre-market high. So we just said, you know what? If it can hold up over 140, that's great. But we want that extra conviction, and we want to take a trade long over 140.5. So we don't trade in the first 5 minutes. There's your run up and your pullback, and we do trade once we get confirmation. This setup has been something that we've been eyeing for a while, and so with it pushing up and pulling back like this in the first 5 minutes, I knew that this is something that we really wanted to keep an eye on. This is a position that we really wanted to take. But remember, it needed to break over and hold the trigger level. So I put this out in the alert room this morning. Here we go. I said Apple up and over the trigger level here, looking for a pullback entry somewhere. And then I give you the contracts, and I say these are the contracts that I have loaded. This is 3 minutes into the trading session, 8:33 a.m. That's going to be 1, 2, 3, right? So this is right after it's pushing up, and I'm saying, hey, I'm already looking for a pullback, and I give you the contracts so that you can get them loaded. That doesn't mean to take a position. It just means to have them ready, so all you have to do is click buy. A couple minutes later, I said Apple's retesting the trigger level now. Same contracts. These are at 0.9. So I give you the contracts again. I give you the price. Then I tell you where the stock is trading at and what we want it to do. We want to see this hold over the trigger though. No play if it keeps flushing. So remember, our trigger is 140.5. So at this time, it's pushing below the trigger. Then the next candle pushes up and goes green. Take the entry. You want to take the entry as close to the trigger level. Look, this is about to break out again. You want to take the entry as close to the trigger level as possible, because this is going to give you a low risk play to the bottom side with the potential for a high reward to the top side. Low risk to the bottom side, high reward to the top side when you're taking the stock or you're taking the entry at the trigger level, as close to the trigger level as possible. So there's your dip, pullback, entry, and then the run up, and we never saw red after that. I believe that these ran to, hold on, let me pull this over. Yeah, so 20%, within 2 minutes, I think it was 2 minutes. Yeah, within 2 minutes, we were up about 20%, then 30%, and then eventually 170% plus. It might have been a little bit more than that, but yeah, I mean they were mentioned at 0.9. They ran all the way up to 250, and that was before it made this high. So it probably ran a little higher than that. But beautiful, beautiful trade. Nice breakdown. You know, this is called cross time frame analysis. So we're using the weekly chart, we're using the daily chart, we're using the 5-minute chart, we're using the pre-market price action. All of those things coming together to give us the entry intraday for the move to the top side. And this was a very high probability trade. So awesome breakdown, awesome analysis. I'm glad that it worked out and went the way that we thought it was going to go. If you're just now seeing this video and you didn't catch my live stream last night, this is one of the stocks that I broke down and said was making my watch list. In fact, I think it was either the first or second stock that I had broken down and reviewed. So the money really is made, you know, the act of trading doesn't take that long. We're looking at 5, 10, 15, 20 minutes, you know, 30 minutes maybe here in this trade. The analysis is where the money's made though. So the act of trading itself doesn't take very long. But when you're going through charts and setups, analyzing something like this could take you an hour or 2 hours to go through all the different setups and choose the best ones, or the ones that you identify with, or the most high probability ones. And you know, if you spend the time doing that, I promise you will be rewarded. So treat trading like a business, not like a hobby. You need to be going through these charts every day. All right, I hope that the breakdown helped you out. Make sure that you're using cross time frame analysis when doing your analysis. That will always help you out as well. If you have any questions, drop it in the comment below. If you want me to make a video on something else, if you have a video idea for me, drop it in the comments below. Press the like button if this video has helped you out. If you want me to do more of these, that lets me know that you guys are enjoying these series. And I will see you all in chat. Thank you for your time.